We are just going to switch tack for you now, though, and take you live to the Reserve Bank's latest decision on interest rates. This is happening in the next few seconds. Our business editor, Ross Greenwood, is with us now. Ross, what are we expecting?
We're expecting rates to be kept on hold, Ash. There's no doubt about that. In fact, what we've seen is from the Reserve Bank over a long period of time, the expectation that underlying inflation remains too high, even though the headline rate is coming down as a result, in particular, of some of the government's energy rebates. That decision has just been made. It's come in as expected. The interest rates are on hold. 4.35% is the cash rate. And, of course, all eyes will now turn to the statement of the Reserve Bank in regards to this. You can see for a long period of time, since November last year, more than a year now, interest rates have been kept on hold at 4.35%. And the reason for that, even though other countries around the world are now cutting interest rates, in Australia, the reality is that inflation has remained higher than expected. We'll hear from the Governor, Michelle Bullock, at 3:30 Eastern Time in regards to what her reasons for this decision are. And the important aspect of this is really about just their view on inflation, and where they believe it goes. Just reading that statement now very rapidly, basically they say that with headline inflation, it's declined substantially and will remain lower for a time, but underlying inflation is more indicative of inflation momentum and remains too high. And so from this, recent data on inflation and economic conditions are still consistent with the Reserve Bank's forecasts, and the board is gaining some confidence that inflation is moving sustainably towards target. So just a message from this immediately is that the Reserve Bank is starting to give more what I'd call conciliatory language about the prospect of inflation starting to come down, underlying inflation. And therefore, you'd imagine that in the future, there may be some view that there could be opening a door for interest rates to come down, possibly not before the next federal election, not in time for the government to be able to lay claim and credit for that, but certainly now saying that there is some suggestion that inflation is moderating in Australia's economy.
So not a shocking move from the RBA today. Have the markets reacted much at this point?
Well, let's just have a little look at this. I'm just looking to see where the markets are right now. Certainly, if we start with the stock market, this is where it is now. So down by 26 points, and you can see that jump right on the very right-hand side. Now, I can tell you that before this decision, just a couple of minutes ago, the ASX 200, this indice was down by 47 points. It's now down by 26 points. So you can see that the market is reacting off the back of this. If we go to the Australian dollar now, we should see a reaction here as well, similar to this. So the dollar has picked up by more than 0.5 cent off the back of this. So this conciliatory language I'm talking about on inflation, opening the door to potential interest rate cuts, has seen the dollar around 0.5 cent higher. It had been trading around 64.13, now trading around 63.8 US cents. And so from that point of view, the dollar around 0.6% higher. The other one, the key one to look at here is interest rates, so money market interest rates. What I can tell you is that the one-year government bond before this was trading about 4.11%. Let's see where it is now, 4.05%. So you can see that money market interest rates have also come off the back of this. So this is all about the language of the Reserve Bank, and I would suggest that markets already are looking at that information from the Reserve Bank and suggesting that maybe the door for interest rate cuts is now starting to open, and most economists are now suggesting it's probably either early next year, perhaps as late as May next year. The money markets themselves, up until now, have suggested April next year is the likely timing for the first interest rate cut. So just repeating, interest rates on hold today, 4.35% from the Reserve Bank, but just maybe, the door is starting to open and they're starting to see their way to the first interest rate cut here in Australia to take on what's happened already in other parts of the world.
Ross Greenwood, really appreciate your instant analysis as always. Thank you so much for that.